Assalamualaikum and a very good day to everyone. So today I would like to share with you another past year question, which is January 2018 MFRS140 IP. Right, so list two purposes of investing in investment properties. Here could be the answer. Right, number one, to earn rental income, and or all for capital appreciation. Right, B. Maximum Berhad acquired a building at a purchase price of 6.05 million on 2nd of January 2013. The legal fees incurred to acquire the building amounted to 500,000, right? The acquisition is eligible for a trade discount of 50,000. The building has 20 floors and all floors are rented out. The fair values of the building on 31st December 2014 and 31st December 2016 given 6.72 million and 6.6 million. Depreciation on building is on straight line method over 50 years. Right, calculate the carrying value of the building as at 31st December 2014 and 2016 if the building adopted cost model, right? So for 2014, the cost is actually 6.05 million plus 500,000 the legal fees minus the trade discount of 50,000. So you got 6.5 million. Accumulated depreciation provided for 2 years. So 6.5 million divided by 50 years times 2. Okay, 260,000. So therefore at the end of 2014, you got the carrying value of 6.24 million. Right, because you acquired 1st January 2013, so 13 and 14, 2 years. Alright, next for 2016, costs is 6.5 million, same with 2014 just now that you have calculated, right? Accumulated depreciation provided from the date of acquisition, which is 2013 up until 31st December 2016. So you have provide depreciation for 4 years. So 6.5 million divided by 50 years times 4 years. You got 520,000. So carrying value at the end of 2016 is 5.98 million. Next, journal entries to record the transaction for the year ended 31st December 2014 and 16 if it adopts fair value model. So if you adopt fair value model, you just have to compare the fair value with the deemed carrying value. So for 2014, you got gain on fair value. So you will debit your IP building credit total gain on fair value of 220,000. As for 2016, you compare the deemed carrying value, which is you will adopt the fair value on the date 31st December 2014 to be your deemed carrying amount. So 6.72 million compared with the fair value at the end of the year 2016 is 6.6 million. Therefore you got 120,000 loss. So for loss, you will debit fair value loss, credit IP building 120,000. So for C, on 1st July 2006, Supreme Berhad purchased a building at a cost of 1.5 million and used it as investment property. Due to the company expansion program, the directors of Supreme Berhad decided to use the investment property as the admin offices. So please take note on the purpose of the building has now been reclassified from IP to PPE. Alright, with effects from 30th June 2016. So 30th June 2016 is the date of transfer. So the fair value of the building on 30th June 2016 was 2 million with a remaining useful life of 40 years. Right, the company adopted fair value model for IP and revaluation model for PPE. The financial year ends on 30th June every year. Right, discuss the accounting treatment of the building on the date of transfer. So on the date of transfer, on 30th June 2016, the building will be classified or reclassified under MFRS 116 PPE. Because why? Because there is a change in use from IP to owner occupied. The PPE will be measured at the fair value of IP on the date of transfer, which is RM 2 million. Right, so your IP will be measured at the fair value. Okay, on the date of transfer, the gain in fair value of 500,000, which you have to compare the deemed carrying value of your IP to 1.5 million with the fair value on the date of transfer, which is 2 million. Right, the difference you got 500,000. It is gain on fair value, right? So not to get yourself confused, right? So you have to understand that the reclassification is from IP to PPE, right? IP to PPE. So for the third point, this third point is actually the last transaction for that IP building before it being reclassified to PPE. So you have to settle the part that the IP building has a change in fair value, right? So the change in fair value give rise to gain in fair value that will be credited as income to SOPO. So that's all for today. Thank you very much for your time, and thank you for watching.